What's up, everybody? I'm just checking back in. Haven't made a video in a while. Thought I'd make one, show you a few things. One, this is XRP trading pretty good. The chart is looking wonderful. This is all the places it goes to. Korea is the main one, Japan, and you see US driving in there now and then. You see it sprinkled throughout as time passes. You see a little XRP going all over the planet. Right here, if we're looking at XRP in the top 10, number 6, we got it up on the last 7 days at 11%, 12 and 30, 37 in the last quarter, and 23 overall for the year, right? Which is pretty good, pretty good. Let's look at, let me go here real quick. Not that. What are we looking at here? XRP. So if you look at this puppy right here, that is one bad 1 day chart right there. What are we at for 1 day? We are at 5.88%. I think this number changes all the time for the day, but that's a pretty good move for the day. You look at it same way on the other one, 7 days, 1 month chart, so on and so forth. Yeah, so we're back at one of those peaks again. Hopefully we can keep going up. The reason you see it going up is because news of settlement with the SEC case, SEC versus Ripple. So that's panning out. We got some news from Brad Garlinghouse. Well, he liked a tweet that basically said the case was done and over. If that happens, ladies and gentlemen, let me show you what we have here. So I downloaded this from Ripple. You can here. Let me hide this real quick. So I got this from Ripple's website. So you can go to ripple.com. You can download now. It's going to pop up something for you to put some information in. If you can put it in, you'll get a free download. Otherwise, look at it here. This thing is 62 pages long. I am not going through all this. So let me just resize this real quick. And hold on. Resize this and let's just scroll through it. Shrink it one tad, whatever. All right, introduction. Let me get here. So there's yeah, I'm not gonna read that. But the intro is right here. So Ripple is a crypto solutions company that transforms how the world moves, manages, and tokenizes value. That's the key word right there, the tokenizes, right? Ripple financial solutions are faster, more transparent, and more cost-effective, solving inefficiencies that have long defined the status quo. And together with partners in the larger developer community, we identify use cases where crypto technology will inspire new business models and create opportunity for more people with every solution. We're realizing a more sustainable global economy and planet, increasing access to inclusive and scalable financial systems while leveraging carbon neutral technology and a green digital asset, XRP. This is how we deliver on our mission to build crypto solutions for a world without economic borders. So that's just a fancy way of saying they build it on the back of XRP. Ripple is. And this is a nice statement right here. A world without economic borders, meaning this is a global mission. They are trading globally, or they will be moving value globally. So every asset in every jurisdiction of the entire world will move across blockchain. Not all of it will go to XRP, but a lot. I'm pretty sure they will get a large percentage of this market. And if you guys don't think there's a market to be had, let me just scroll down quickly and show you this. I was going to read a lot more, but it's too much. It's too much. Too much to read. Here's a summary of findings. Let's go over this really quick. So, big picture. Overall, Latin America is more bullish on enterprise and institutional use of crypto for business, followed by the Middle East and North Africa, then North America, Asia Pacific, and Europe, Middle East, and in Africa. What do y'all see missing here? United States. That's because the United States is tripping. The vast majority of global finance decision makers, reading right here, yeah. Global finance decision makers, upwards of 88% believe that crypto and blockchain will have either a significant or massive impact on business, finance, and society over the next 3 years. That's 3 years, y'all. That's till 2026. We're halfway through 2023. Over half of global respondents cite already having a cryptocurrency solution in place at their company or are in the process of implementing one. Upwards of 3/4 indicate an openness to using or exploring other crypto technologies over the next few years. Example, stablecoins or CBDCs, stablecoins and NFTs. I'm going to skip past this and maybe I'll do another video and read through most of this, but I am going to skip past this. Here we go, tokenize. So if y'all don't know what tokenize is, just think of digitize. You probably heard that word in the past or past before. It wasn't used in the same way as this one is, but they're very similar, right? We live in a digital world right now, you know, with computers, phones, et cetera, et cetera. You know, everything we do is digital, dang near. We barely print paper anymore, right? That's not what we're talking about. What we're talking about, well, similar to what we're talking about. Tokenizing is taking the value of or taking a physical commodity or asset, something like gold, silver, real estate, debt, or what we call money that we know as money, can be tokenized and it can be moved around. And tokenize simply take that value and move it to the blockchain, basically. Represent it on the blockchain, maybe is the better way to say it. So I will, let me see, this is a long one. I will read a short part of this and then we'll focus on that big number right there. All right. So tokens or digital assets are digital representations of value on the blockchain. In essence, anything can be tokenized, including but not limited to currencies such as CBDCs and stablecoins, real-world assets, liquid or illiquid, like carbon credits, stocks, real estate, and gold, art and collectibles, intellectual property and access rights, tickets, and more. Everything. They should just say everything right here. Some key benefits of tokenization on the blockchain include fast, efficient transactions in a 24/7, 365 market, right? Or markets, transparent transaction data, and decentralized security, meaning everybody can see it and it's pretty secure. Every validator or 80% of the validators have to agree on the transaction before it's applied to the blockchain, at least with XRP, right? Other ones have similar setups, right? So streamline capital flows and improve settlement times, new borrowing, lending markets via DeFi. This is big. This one is big. Borrowing and lending. What they're talking about is what's an asset to you or to, let's say you deposit $500 in the bank. That is an asset to you, but for a lender, that is a liability. They need to take that and turn it into an asset. So what they do is they take your $500 and they lend it out 10 more times. Yeah, that's called I forget every time, but yeah, that's the banking scheme where they can lend out your money 10 to 1, right? All of this will be automated via DeFi. DeFi is decentralized finance. That's on the blockchain. Increase customer engagement, brand loyalty, and financial inclusion through fractionalized ownership. That is huge. They talk about this down in the document somewhere. I kind of browsed through it. I didn't read much, but I browsed through it. They talk about this. We'll come back to that. Improve liquidity and the ability to create multi-tier pricing structures. On-chain compliance process linked to a digital wallet and/or digital identity. Oh man, y'all just don't know what's coming in that. I don't even want to talk about it. It's a lot of good coming out of this, and there's some bad and some really bad. But check this out. We are not alone in the sentiment. In fact, Boston Consulting Group estimates the tokenization of global illiquid assets to be 16 trillion business opportunity by 2030. Bloomberg estimates there's roughly 4 trillion locked in private equity and real estate. Real world assets like stocks, bonds, and real estate and others can be tokenized on blockchains with improved efficiencies over traditional market infrastructure. Tokenizing previously illiquid asset classes like these opens up not only a whole new world of global investment. Look, what they saying right here is that this is going to create, this tokenization and moving everything to the blockchain. It allows things to move speedier, more efficiently, more securely. And not only that, but a bunch of new products is what they're saying, a bunch of new financial assets we have never seen before that will exist when this foundation is laid. The foundation is laid. They're just putting in all the plumbing, right? They're putting in all the plumbing, just like you do in your house. You got to lay a foundation, then you put in your pipe work and whatever else the order of the house is built in. That's what they're doing. And when this thing is finished, look out, because we got this big green number on the right-hand side. Yeah, but they're basically telling you that everything is going to be tokenized. Not only that, but it's going to create opportunity for new products. And I can't stress it enough. Like if you look at this real world assets like stocks, bonds, real estate, stock market alone, bond market alone, real estate market alone, they're saying real estate is 4 trillion, but there's so much money, so much more than even this number right here. We ain't gonna talk about it. We're gonna just talk about what they have. Anyway, the idea is by 2030. So the market right now is, let me see what this market is. Here we go. 1.1 trillion. 1.1 trillion market cap rate. You can see right there. See that? A 1.1 trillion market cap. We're a long ways from 16 trillion. That's another 15 trillion. So we're not the US where we run up debt. Can't do that in the blockchain market, right? In crypto. But look at this. 16 trillion. So by 2030, so what that tells you, or what it tells me, I should say, is over the next, we're in 2023, so you add 7 years, you get 2030. Over 7 years, they're roughly saying, you divide it into here, you're really going to get about 2.2 trillion per year from here on out. $2.2 trillion added to this market cap right here, the 1.158. The highest we've been is, if we look at here, the highest we've been is, I think, close to 3 trillion. We almost hit the mark and then we failed, right? This was the peak of 2020, late 2021. Yeah, that was a nice ride during this time, but we came down, right? Because of a lot of reasons. Can you imagine this would look like a hill compared to a mountain of 13 trillion. This thing don't even scale up to 13 trillion or 16 trillion, sorry. So adding 2 trillion pretty much every year from here on out. This 16 trillion will not be added in the year 2030. It's saying that we're going to build up to that, right? So let's keep it moving. There's a lot to read here, but so I won't read it all. But yeah, there's a lot of good information in this document. You know what? I'll put the link in the video at the end, so you can kind of scroll through and you can see some of the stuff. Another spot I wanted to stop was, oh yeah, is this one of them? Wait, let me look. Oh no, not here. Hold on. Yeah, this is it right here. So NFTs for business. Despite the 2022 downfall and what many assume to be a temporary fad, NFTs are still totaling close to 500 million in monthly sales volume. In Q1 2023 alone, the NFT market experienced a 137% increase in trading volume and had a total of 19.4 million NFT sales. Not only is there ample market opportunity, but also endless business opportunity. Endless. Y'all don't understand what they're telling you. You have to get into this market. If you don't get into this market, you won't own anything. Everything is coming here. And it's different than stocks. So if you're thinking of stocks, yeah, you kind of close, yeah, because the charts go up and down and they look like stocks. In my opinion, this is just my opinion. This is much, 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 much different than stocks. Uh, crypto represents ownership, just like the deed to your house or the deed to your car or whatever they call it, whatever they call it, one for your car, or whatever you own, a receipt or whatever. Crypto is more like that, but it's also programmable, meaning you can program it to do things or hold things or hold value or move value or whatnot. So hold on, y'all. Anyway, where was I? But also endless business opportunity for companies to take advantage of these tokenized assets. This is true across a variety of use cases, from media and entertainment to carbon markets, real estate, gaming, loyalty, and rewards, and beyond. They can't even list them all. They'd probably be going, it'd probably be another 2 paragraphs if they listed them all. In fact, some of the world's best known brands are using NFTs as their entry point to Web3, including the likes of Tiffany and Company, Nike, and you know who, Budweiser. Starbucks is also joining the Web3 movement. Yeah, Budweiser is that one company I've been doing them ads that's in trouble. So they might not be around if that's them. Is it Budweiser or Bud? Whatever, same. Starbucks is also joining the Web3 movement through the launch of their new NFT loyalty program as a way to promote the brand, improve customer engagement and experience by offering members the ability to buy digital collectible stamps that are minted as NFTs on the blockchain. Blah, blah, blah. Look, I think y'all get it. This is pretty good right here. I'm gonna skip right over here past the loyalty stuff and go right here. Another area of business innovation using NFTs. In fact, they decided to mention this and give us an example, is related to the tokenization of real estate, i.e. mortgages, right? One example, mortgages. In February 2022, a home in Tampa, Florida was recorded as the first first in the US to be sold as an NFT on the blockchain, facilitated by the Web3 property technology company, Propy. Companies like Propy are leveraging the power of blockchain for easier, faster, and more secure real estate transactions, resulting in powerful advantages for both business and consumers by solving real-world problems in the real estate industry around process efficiency and transparency of ownership confirmation. Interested buyers can quickly and easily view prior owners' tax records, pricing history, etc. Y'all see how convenient they making this? When this stuff get on the blockchain, the whole world is going to change. Look at this. Y'all know what this is? You can own a fraction of a home if you wanted to in this new system. And they're just giving an example of homes or real estate. They just said right here, beyond, right? Which means everything. So if somebody had a stockpile of gold, you wanted to own a portion of it, buy these tokens. Buy these tokens. If you want to own anything, buy these tokens. All of this stuff will run across the blockchain. So Homebase, a crypto startup, tokenized a single-family rental property in McAllen, Texas, on the Solana blockchain, and real estate investors purchased the NFT for $246,800. The home was tokenized on Solana via a smart contract tied to an NFT, right? So what that means is basically this value right here, or this house, was tokenized as an NFT. The NFT has a contract tied to it, which makes it programmable, where they can say they can issue out royalties to the owners of the NFT or the NFTs. Depends on how many people bought this, because this is fractional ownership, right? So if more, I'm getting pinged. I gotta speed through. So let me go back down where. This enabled fractionalized ownership of the property among various real estate investors, where users could quickly and easily purchase a portion of the property's value in a single click. Fractional ownership of real estate via NFTs is driving greater financial inclusion by making property ownership and equity stakes more affordable and accessible for more people. Real estate tokenization projects are bringing more players into the market, more assets on chain, including Solana, XRP, Ledger, Ethereum, and others, to increase liquidity and simplifying the home buying, selling, and renting process with secure, verifiable transactions, right? So on and so forth. The reason they say buying, selling, and renting, because if you own a fraction of some rental, say you own a fraction of an apartment complex, and you say you only own 1%, and the rest of the 99% goes to whoever. Every month when the rents are paid in that apartment complex, that smart contract tied to the NFT that you own the NFT, and the smart contract that's tied to that apartment, or the NFT that's tied, I'm getting it all twisted, tongue twisted. What I'm trying to say is the 1% ownership that you represent, that smart contract will pay you hourly, by the minute, by the whatever, by the month, and you will get paid faithfully as long as that, of course, that apartment is around. But yeah, that's what it represents. Or that's what it gives you the ability to do. I cannot go on much longer, but there was something I thought I saw down here. They're talking about stable CBDCs and stable coins. Hey, look, y'all get in now, and y'all get the tokens, the banking tokens, XRP, XLM, XDC, Algo, Quant, VT. It's a few of them out there that y'all can get, which represents ownership of the assets that will be going across these networks in the future, right? Everything is going to be tokenized and come to the blockchain. Don't get it twisted. Even AI. Yes, even AI. So if you want to look at some of this stuff right here, look at this. According to McKinsey, roughly 90% of the world's central banks are now pursuing CBDC projects. If you don't want to be a part of CBDC, get in where you fit in right now. Up from 80% last year. Additionally, Juniper Research forecasts the value of payments via CBDCs to reach $213 billion annually by 2030. So 213 billion every year, all the way up to 2030, up from just 100 million in 2023, representing a massive 260,000% growth rate. What that means right there is that's huge. I don't know if you can tap into that, but if you can, a token like XRP will have CBDCs running on top of it. It won't be the only one, but it is one of the primary ones that will run CBDCs. So the more this thing grows, whether it's 260,000% or more, or 213 billion each year or annually, you can get a share of that just by ownership of these tokens, right? Not every ounce of 213 billion a year will go into XRP, but it will go to that one and other ones. I think they build them with XLM and some other tokens out there as well, right? Yeah, CBDCs is a scary part. But other than that, I gotta go because yeah, I'm working. I gotta get up out of here. All right, I was taking a quick break. Catch y'all later. Until next time. Maybe I'll come back and read some more because it's still like 60 more pages. I'll just come back here and do like another part. All right, y'all. It was good in the hood. I'll catch y'all later.